Good afternoon, traders and investors. Will back here with another one, guys. Hope you had a beautiful weekend coming to you Monday after the close here. And the best case scenario for your markets is currently underway. And that is the fact that while big tech is taking a slight breather, the rest of the market is holding gains and rotating properly. This is exactly what you want to see for the continued bull run in SPY, guys. So on the day here, SPY down 0.52%, QQQ down 0.93%, but decent little gains here in healthcare and especially in the Russell as growth stocks continue to outperform. And what we are going to look into today, guys, I have a few earnings from last week that we didn't get a chance to cover, so we'll go over those briefly. Those are ULTA Beauty and Snowflake earnings, and then we're going to get into our major recaps here for our indexes and then our major tech names as well and see, are we going to buy the dip on these tech names? There are some beautiful opportunities presenting themselves on a couple of tech names, and we'll cover that in today's video. And as well, lastly, we'll recap my portfolio and see how we ended last week and what positions am I into early this week as well. So without further ado, guys, let's get right into it here. You can see SPY down about 0.5%, but holding this beautiful range at the top. The market was fairly mixed. Oops, pulled up the tab here. Market was fairly mixed here, as you can see, right? Major tech coming down. This is what you want to see. When major tech takes a breather, the rest of the market is here to support the gain. So very, very nice broad market performance by the rest of our market here, largely in part to healthcare. So beautiful gains by the healthcare bulls. And on the one-day relative performance, you can see that we did have a fairly mixed market. Of course, our major sectors down in the red here, obviously led by technology and basic materials, but we did have a few in the green. Financials edging out a little bit of a gain here Friday and today as well. Healthcare as well with some beautiful performance on the day too. So you can see, guys, market is very well balanced currently. On the 1 week relative, you can see as well that everything pretty much still in the green, except for communication services. Communication services obviously led down largely by Facebook. Facebook having a decent sell-off might be a good opportunity for a buy. We'll take a look at that when we cover Facebook. And without further ado, let's get right into our earnings, cover them right away so that way we can get into our technical analysis. So let's cover ULTA Beauty, guys. So ULTA Beauty last week reported earnings here. And as you can see, they had a very big gain the day after earnings, up 11%. And today, up an additional 3.12%. So all in all, guys, almost 15% to the upside. ULTA Beauty recovering very, very, very healthily after this really nasty sell-off that was started pretty much back in May and lasted all the way through October. Now only pretty much 13% off of your all-time highs after being down over 30%. So beautiful recovery by ULTA Beauty. There's a few things that stood out to me here that I'm not really looking forward to in terms of the company. Yes, the company's had some very, very solid technical performance. You can see the chart is looking very, very beautiful here. But on the flip side, there's a few key things in the revenue metrics that I am not very favorable about. And that's why I do prefer the company Elf Beauty to ULTA Beauty. And we'll get into that right away. So what happened exactly on their earnings? Let's take a look. So they had a very, very, very big beat here on EPS. Well, not that very big, but it was a nice beat because they were expecting to guide a bit lower for the quarters. They had guided previously lower throughout the year, but now they've been guiding back to the upside. So very, very nice recovery in terms of EPS. They've been able to pretty much save their EPS over the course of the year after guiding really, really badly in Q1. I'm not sure if you guys remember that. Q1 and Q2, they guided lower for the year, but now Q3, Q4, they've been able to kind of recover that guide. So up 2.15%. And now revenue up about 1% off of that. And the really big gains came from the fact that they said that the consumer was resilient in the beauty aspect of things. And even though that macroeconomic conditions are not that favorable right now, and the consumers are tapering back on their discretionary spending, beauty remains a category, guys, that is sort of recession proof, right? It's very, very tough for people who use beauty products to just stop using them. They're kind of an essential item at this point. I wouldn't really categorize them as a discretionary item. Yes, consumers may trade down. Instead of buying the $15 lip gloss, they may go for the $5 lip gloss or whatnot. But ULTA Beauty is a company who caters to multiple tiers of consumers with the products that they sell. So when consumers do trade down, they can trade down within ULTA Beauty's line of cosmetics, something that is not the case for a company like Estee Lauder, which has more of a prestige/luxurious niche. And obviously, Elf Beauty has been the large winner of this whole situation because they really sell cheap and affordable beauty products that everybody wants and everybody can still afford when times get a bit tough and when the wallet gets a bit thin. So let's go over the earnings call real quickly here. Ulta Beauty Shop shares pop as sales climb 6%. And this is the kicker that we will be focusing on. So the sales climbed 6%. On a year-over-year basis, guys, the revenue is only up about 6%. And I want to bring this to your attention because this is the one thing, before I forget, that really stands out to me. So let's take a look on their annual basis. What's going to happen to their EPS? As you can see, the really big explosion has happened here over the past 5 years, going roughly from 2018 to almost $11 in EPS to 2022, almost over double that, right? $24 in EPS. But take a look at the next years. Next year's EPS is not growing by that much, right? They're kind of getting back to really low EPS growth. We're talking anywhere between 5 to 7% for the foreseeable future for the next 2 years. And then even after that, barely 10% growth in EPS, not what you want to see from a company that is said to be ever in expansion. And even on the revenue side, guys, take a look at this, right? They've been doing a good job of expanding the revenue here, almost 10%. But here is the problem for the next couple of years. The revenue is only forecasted to grow between 5 and 6% for the next 3 years. That's just not good enough for me, guys. I'm always looking for companies that can at least grow their revenue by double-digit numbers. So that is something that is really, it's kind of a thorn in my side for this company. The fact that they're guiding only 5-6% revenue growth for the next 3 years. Now, their market cap and everything is fairly decent. They are bringing in roughly 2 to 1 price to sales, right? So their market are about a half, right? So their market cap is about 23 billion, and they're set to bring in roughly about $11 billion this year. So their price to sales is not too bad, and their PE ratio is not too bad either. It's just they're not growing at the rate that I would like to see them grow, and that's why I much prefer a company like ULTA Beauty instead, which is really growing nicely here. So we'll get into it a bit here, right? So the specialty beauty retailer raised the bottom end of its range for full year sales and earnings expectation. Said it expects net sales for the fiscal year to be between 11.10, 11.15. Okay, fine. And comparable sales to range from 5 to 5.5%. That's just not good enough for me, guys. Really not good enough for me. The CEO said the retailer saw healthy traffic across its stores and on its website. That's good. He said the company expects a more promotional holiday season in the beauty categories this year, but the season is off to a good start and stores are stocked with both value first and splurge worthy items. So you guys may or may not know Ulta Beauty is partnered with a lot of major retailers. You can find them in a lot of pharmacies, in Walmart, in Target, and they do have a big online presence, obviously selling their products on their own website and through Amazon too. Now, so the major thing here that I want you guys to take away from this earnings call here is the fact that the revenue is just not growing to the strength that we want it to, right? That's the only thing that I'm really focusing on here. Yes, the earnings was a fairly decent guide. They are guiding up. They did beat on revenue. Their profitability is not too bad, as you can see right here. We'll go over it really quickly. Their profitability over the last year has been about 12%, but you can see the decline in revenue over the last couple of quarters and the declining margins ever so slightly down back into the 10% range this past last quarter. So they do really need to start mitigating their costs. That is really the big thing. Sales in the makeup category were flat as mid-single digit growth in mass brands of makeup offset a decline in prestige makeup. As we were talking about, guys, consumers are trading down from the higher ticket items to the lower ticket items, but still within the company here, right? So Kimball noted, the CEO, once again, the resilience of the beauty category in nearly every economic environment. This is true. On the earnings call, he referred to data from Euromonitor that showed the U.S. beauty category has grown in the low to mid-single digit range every year for more than a decade, except during the Great Recession and during the pandemic, right? So basically, all that to say, guys, that it is a fairly resilient industry. The company is doing fairly well, but just not good enough for me. And at this level, may not be a buy for me either. It was fairly cheap when it was in the lower 400s, high 300s. You might have been able to take a nibble for a swing trade, but not a company that I am positioned in for the long term. Definitely, if I do have a beauty play, I will reiterate my personal beauty play. The one that I've been trying to build a position into and playing a lot of options in is e.l.f. Beauty. And now secondly, guys, let's cover Snowflake. Snowflake used to be one of the very hot retail trades back in 2020 and 2021 when they IPO'd. But I've always had one big issue with this company, and it is their valuation. They are valued excessively rich, guys, excessively rich. And we'll go over that right away. So on their earnings, what happened on their earnings? Yes, they had a nice jump after earnings. We're talking about 7%, and they've been holding up gains, but they're still at a lower end of a very, very, very extended range as institutional investors potentially are building positions here. The 1-year price target pretty much stands in the low to mid 200s, so not too far away from that right now. But there's two things, guys: the valuation and the fact that they're not profitable yet. So let's go over it real quick. You'll see that they have a market cap of $62 billion. Let's take a look at their revenue, right? The revenue is only $2 billion. So that's a price to sales, right, of over 30. Over 30 price to sales for this company, and they're still not profitable. As a matter of fact, they're not even reducing their net losses by that much. That is the one thing that continues to plague this company. And you may say, well, Will, they're going to be growing revenue in the future, so therefore their price to sales ratio should be coming down, right? Well, let's have a look, right? Here you have the EPS growth for the next few years. So EPS growth is going to come up as they hope to gain profitability. But even at that, guys, they would be valued extremely rich. Even if in the next 3 years they do generate $2 per share, they would be valued extremely rich. But here's the main kicker, right? The price to sales is not that great at all. 2026, their forecast for revenue is $6 billion. So if their shares were to stay at this current level, at the $180 mark, at a $62 billion corporate valuation here, in 2026, if the share price does nothing from now until then, they would still be a 10 price to sales, which is just too much. I understand they're a growth company, but this is just too much for me in terms of valuation. This IPO was bid up very, very, very heavily. In my opinion, the fair value of this company lies somewhere below pretty much $100 for you to really, really, really get the best bang for your buck possible. So it's just not there yet, guys, for me, right? So this is the main problem, right? $62 billion in market valuation at $180 per share currently. And you can see their 2026 revenue is only about $6 billion. So even in 2026, price to sales of 10, which is fairly rich for this company, really need to start mitigating their net losses here. And they're going to have a big issue if Microsoft and Amazon start getting into more of the data sharing and data warehousing services that Snowflake do provide here. So very, very good company for what they do, but the moat is not wide enough. They open the door to some very, very heavy competition. But as of now, they are partnered with a bunch of people, and you can see it right here, right? They're partnered with AWS. They're partnered with very, very big people, right? BlackRock, FactSet, a lot of very, very big people, Accenture, right? You have other big players in the industry like ADP, Equifax. So they're not short of very, very big partners. As you can see, right? MasterCard, they do stuff for Domino's as well, Hershey's. So there's tons and tons of big names that do use their services, and they are growing as a company. Don't get me wrong, they're growing fairly well. So 34% year-over-year product revenue growth, very good. 135 net revenue retention. So this is a main one. Are customers leaving or not? Seems to be that they are not leaving here. And $1 million product revenue customers, they're up to about 436. We were taking a look. These kind of have the same metrics as our cybersecurity companies had in the past few weeks, if you guys remember here. And now they do have 78% non-GAAP product gross margin. It's just the problem, even though they have great gross margin, the net margin is still negative. So they're still running net losses as a byproduct of a lot of company expansion. That's fairly obvious. They are a growing company here. So as you can see, the annual revenue is growing at a fairly decent rate, 69% year-over-year growth. That's what you want to see. 32% year-over-year if you measure quarter-over-quarter from Q3 of last year. Significant customer commitments. So here's where they show the customer commitments. And are they growing their true customer base? Yes, they are. Very, very nice, beautiful growth here over the past year, but you can see that it's not that expansive, right? So it's really, they're gaining new customers, but not in the scale that you would like to see them. Most of their obligations are coming from recurring business and increasing prices from the recurring business here. So landing strategic organizations, their customer count is scaling up fairly decent. Forbes Global 2000 customers is scaling up fairly decent as well, kind of plateauing here in the last couple of quarters, but that's okay. Adding quality customers, as you guys know, that companies cut back on software purchases in macroeconomic times of uncertainty. So they are adding quality customers, but at a bit slower rate than they were in the prior years. And here we have their world-class retention rate, which has been coming down, unfortunately, for the past year. So it used to be in the high 166%, 178% of net revenue retention rate, which means they onboard new clients and they can upsell those clients, and those clients remain year over year, which is why you have a over 100% retention rate here. So all you guys can obviously see, the last slide that we're going over is the expansion in the operating margin over the past 2 years. So they did do a good job of bringing it up 3.7 percentage point over the last 2 fiscal years, but once again, not bringing it enough of it to the bottom line. So Snowflake, in terms of a long-term portfolio, guys, not my favorite play for me personally. For a technology play, there are far better companies, in my opinion, at far more attractive valuations, in my opinion. But however, was a decent area for a swing trade. If it does come down in the lower 150s, let's say it does come down to about 160, 150, I may make a trade just basing off of this lower support area right here, right? This whole channel that we have between the 150 and 125 area could be an interesting play. But in terms of their long-term growth, guys, I just need to see more cost reduction, and I need to see faster EPS gains. So they're going to need to really heavily expand their EPS gains once they do become positive, to really start lowering a lot of their valuation metrics, because in my opinion, the company is still valued extremely, extremely rich. Still at these prices, which are almost half the all-time high, the company is valued to absolute perfection in terms of growth over the next 5-6 years. So that's pretty much all I had for you guys for earnings. Now let's get into the technical analysis. All right, guys. So without further ado, let's do SPY right away, right? So 1, 2, 3 legs up. We are still bull flagging at the top here on SPY as our rotation does continue from our other sectors, which is why SPY isn't coming down. Big tech is obviously coming down, and you would expect it to bring down SPY. But the thing is that XLF and XLV have been absolutely crushing it by maintaining gains. So these drops in QQQ are not being seen in the SPY, and that's the best case scenario for your bulls. So still bull flagging at the top. I'll remind you, if we do ever pull down 451 all the way down to 441 is the area that we are looking for. And they're kind of battling here with the previous 52-week high as well, which is about the 459 level. Crack 459, and you have a clear shot all the way to the all-time highs, all the way up at 480. Not much resistance before 480 anyways. So we will see. Can the SPY bulls push out of this range once big tech bottoms out? Can financials and healthcare hold this market while big tech does its little pullback here? And then when big tech comes roaring back, will it be able to carry SPY to new 52-week highs? We will see, but SPY looking very good. No red flags on the daily either. Just keep an eye on this level right here, 453.44. Lose that, you lose your daily lows pretty much, and then you may be in for daily consolidation. Weekly looking very, very healthy. Bulls with tons of space. If ever we do weekly consolidate, anything above 409.32 is just for a weekly higher low for further price expansion here over the next month or two. Now moving on to QQQ. QQQ looking very, very good as well. Had a nice dip here today, down 0.93%, had a gap down open, and then ran with it. So take a look at the loss that we had here on QQQ since Friday at the close. They were down almost 2% on the day for QQQ, and most of that, once again, was led by big tech, but did a great job of recovering a lot of that intraday. Very, very beautiful recovery by the hourly time frame by the bulls here. So daily consolidation mode is pretty much ongoing for the bulls here on QQQ. Right, 1, 2, 3 legs up, and now they have lost the series of higher highs and higher lows. They just lost it today, right? 383.65. We set a lower low today, so now the price is in discovery mode to the downside. I'll remind you, the area we're looking for, 387 all the way down to pretty much 374 is going to be the reaction area that I'm targeting for pretty much a retest area, and then further price expansion into the end of the year. Bulls looking very, very, very healthy. So even if we do set a little bit of a daily downtrend, no biggie. We do have a little bit of a gap to fill here around 378.63. And so if we do start filling that gap, no problem at all. It is just weekly consolidation for a weekly higher low. Anything above 342.39 is just that weekly higher low for further price expansion. Once again, bulls looking extremely healthy. You can see that on the monthly breakout is pretty much confirmed. So now we are just waiting for the lower time frames to do their thing, set the higher lows, and then rise again. But very, very nice buying opportunities on big tech, in my opinion. XLF financials. once again, holding up, guys, 0.11% to the downside, but still performing very well on the day. We are currently battling with our area of resistance, and I brought this up a number of times on the channel. We'll do it again here. So this whole area, 36 to 37, has been an area of resistance here over the past year and a half. So it's going to take a lot of work to get through that from the bulls. We will see if they try to do this in one shot, but in my opinion, we're getting pretty tired, right? RSI is pretty tired. It's very, very overbought up here. We've made a beautiful move, 1, 2, 3 legs up. So it wouldn't surprise me if it is almost time for the financials bulls to take a little bit of a breather. We'll need QQQ to start rallying. If financials want to take a breather, you need to see QQQ start moving back to the upside, keep the healthy rotation going for SPY. Financials looking very healthy. Anything above 35.14 is just for a daily higher low for further price expansion. Lose this series of higher highs and higher lows and go into consolidation. I'll remind you, your support stays put between $35 and $34, likely area where the bulls pull back to, right? And on the weekly, looking very healthy. Any weekly pullback is just for a weekly higher low for further price expansion. So if they can't smash this big red resistance area in one clean shot, we're going to be looking for the two-step, and I do think that they're very, very well set up for that. Even on the monthly, guys, looking very, very healthy for a monthly breakout to the upside. So we'll let bulls do their thing and continue rotation. XLV Healthcare looking good as well, up 0.19%. Very, very decent day, right? XLV now completing its third leg on the bull side as well, and pretty much almost getting through, right? Almost getting through our 132 highs. We're just barely, right? 0.8. So 8 cents above our previous high that we had set right here back in October. Now we have finally engulfed the weekly last leg down, right? So there are 1, 2, 3 weekly legs down. Now the bulls have put in a very, very beautiful move to the upside, engulfing your previous move down. And now we will look for price expansion to the upside. If ever your bulls have to consolidate, I'll remind you on the daily, 129.34 is the area to watch, right? So anything above that is just for a daily higher low for further price expansion to the upside here. If ever we lose this series of daily highs and daily lows, we're just looking for weekly consolidation at that point. Keep an eye, 130 area, your moving averages are right down there. And we are just looking to set a weekly higher low to set a weekly uptrend. So XLV, one of the only ones so far that is not fully back to the previous August highs. You can see XLF has made it back to your August highs. QQQ has made it back to your August highs. Even SPY has made it back to the August highs, but XLV kind of trailing behind still. So we are still looking, but the bulls are coming. Tons of room for the bulls to rotate into healthcare. If ever financials take a break, and if ever QQQ continues to remain flat. IWM Russell has been one of the biggest winners here over the past 2 days, up pretty much another 4% in the last 2 days since Friday. And now as well, completing the third leg of this move higher here. We were looking at the tightness of this range. And I was saying, guys, as long as SPY was healthy and there was continued rotation, the lean on the break was bullish. If the whole market would have pulled back, then this probably would have broken bearish here. But with continued rotation, even with big tech down, they broke bull, and in a big way. When you see a tightening range like this, you know it's going to break hard, and they did just that. Now finally getting back above this green line here, which is your 200-day moving average. Russell looking very, very, very healthy. Not quite overbought just yet on the RSI, but kind of tending towards that area, so we'll keep an eye on that. Very, very good volume here on the day on the breakout as well. So now bulls are in full control, guys. It is daily uptrend mode again, so now anything above 177.33, any pullback is for a daily higher low for further price expansion. The uphead resistance targets now, guys, really stand put at around 191, 192. That's going to be the area we're looking at. And then you have this massive area of resistance, the past 2 years worth of resistance, really close to the 195 to 200 area. So we'll see if they can get there in one clean shot on the weekly. But if ever the daily bulls do have to take a little bit of a breather here into December, perhaps, well, they have set tons of space to do it. If we do consolidate, guys, keep an eye on the 178 all the way down to 177 area. This pocket with your moving averages should provide some very decent support for the weekly pullback, and set the higher low, anything above 160, 170, higher low, further price expansion into our big red resistance zone. So keep an eye on that. Index is looking very good. IWM Russell, the growth stocks, your biggest winners so far over the last couple weeks here. Very, very, very good performance by then. And now they have pretty much reversed a lot of the damage that has been set since the month of August, almost entirely engulfing this move. So we really have a great chance, guys, at resetting a weekly uptrend as soon as your bulls take a breather. So keep an eye on that. And now lastly, Dow Jones. Dow Jones performing very, very decently. down 0.11%, but still maintaining gains at the highs, guys. So 1, 2, 3 legs up once again by the Dow Jones. So Dow Jones kind of in overbought territory. And if there's any index that really doesn't like heavily overbought territory, it's the Dow Jones on the daily. You can see whenever you get overbought territory, it does tend to pull back quite aggressively here. Not like QQQ, which can stay overbought for a while. Dow Jones does tend to correct. So Dow Jones, where do we stand? Well, we are very close to our all-time highs, guys, right? We're only about 2% off the all-time high, still about 2.13%. So if ever the bulls do lose steam a bit on the daily, guys, you will have to look out to the downside here. Keep an eye on this previous 52-week high level right here, 35,600. That should be the area of your number one target if you are looking for a potential retest. So this area right here, and then further down, you do have the area where the leg started, 35,300. So this little pocket right here is going to be the liftoff zone here, a bit lower, bit more support down here, 35,000 all the way to 34,300-ish. But I do think that the bulls put up a bit of a fight in this previous 52-week high area here. Very, very decent area. And you do have your 12 EMA, this yellow line, the moving average right there as well. So keep an eye on those two levels. No red flags whatsoever. And obviously the bulls on the weekly creating a very, very large move off the bottom. Any move down is for a weekly higher low for further price expansion here over the next couple of months. Dow Jones also full monthly breakout mode, right? Monthly uptrend confirmed at this point. So beautiful, beautiful looking chart. No red flags whatsoever. Any pullbacks, guys, on value stocks will most likely be bought by institutional investors. Now let's move down, guys, to our tech stocks. So now, guys, Apple down about 1% today. Apple continues to consolidate, but look at this beautiful consolidation sideways by Apple over the past 3 weeks of trading, guys. So really, really tight range, only about 2.5% with today's trading. So very, very impressive that Apple can make a substantial move off the bottom like this, guys. You're talking about right here, a move of over 16% and only giving about 2.5% of it back sideways and toying with the 12 EMA on the daily here. So you can see the 4-hour time frame here. This is what I was focusing you guys on, right? This 12 EMA on the 4-hour time frame. This yellow line right here, they have now lost it in a significant fashion, but still hugging it. We keep hugging it like a magnet. So Apple refuses to go down without a fight, looking very, very decent, if I do say so myself. This is a daily bull flag, guys, right? Such a high move off the bottom, and now consolidation pretty much sideways is just a bull flag. At that point, you look for sideways weekly consolidation here. Not giving back too much, sideways weekly consolidation. So all the while that we are in this tiny little daily downtrend at this point, it is just healthy weekly consolidation, weekly bull flag for a higher low compared to 166.24 and further price expansion throughout the rest of December and most likely early Q1 for Apple, looking very, very good. Apple not cheap enough for me. I'm really trying to be greedy on my Apple purchases right now. 185 and below is where I would like to open a few positions on this stock. But so far, no red flags. Bulls are in complete control. They have lost the daily ever so slightly, but this is very good in consolidation. Weekly bulls, full control, looking for that higher low. So keep an eye on Apple coming back. Now AMD, nice consolidation as well, guys. On the past couple of days, you can see there's dips all over big tech, 7.5% almost from AMD from the top in the last 4 trading days. Very, very, very good consolidation, if I do say so myself. So we've now lost the series of higher highs and higher lows. 118.22 was the area to protect. We lost that, went all the way down to 116.20 today. So now the bears do have the chance to open up a daily downtrend. If they do get the daily downtrend, no problem at all. What are we looking for? Weekly consolidation, looking for the weekly higher low. Anything above 94 is just for a weekly higher low. Keep an eye, your 12 EMA, guys. I was talking about this the last few videos. 115 down to 110 is your crucial area. It is the area that I will be shopping for AMD positions. If we do continue to pull down, I do have an open contract on AMD for 115. We'll see if we get a sign. I hope I do. And then if we push a bit lower, I will continue to write options as I'm just looking for the weekly higher low for further price expansion here over the next couple of weeks and months. Looking very healthy on AMD. And obviously you have your monthly breakout currently underway as well. So bulls in full control of everything. Just short-term time frame bears now getting a bit of momentum to the downside, cooling off your momentum indicators here. So 115 down to 110 is my personal buy zone. Very juicy area, guys, of previous support. That's going to be very hard for the bears to get through. Amazon, let's take a look at Amazon. Amazon as well with a bit of consolidation here, a little bit of dips on Amazon. Amazon from top to bottom with today's trading down almost 4.27%, recovering nicely intraday here. Amazon battling with this level between the two yellow lines, right? 145 all the way down to 140 is going to be that area that's going to be very challenging for the bears to get through. Looking very healthy on Amazon, if I do say so myself. This is just very healthy consolidation, guys. Anything above 139.65 is just looking for a daily higher low for the next leg of your daily uptrend. If ever we lose that for whatever which reason, well, Amazon still has tons of space to give. Amazon currently in weekly consolidation as well. So all of this daily consolidation is turning now into weekly consolidation. We've seen it on a couple of names. Apple, weekly consolidation, bull flag. AMD, weekly consolidation, bull flag. Amazon, weekly consolidation, bull flag, guys. Everything is looking beautiful. This is exactly what we want. We want the bears to pull down into the bull support, and then bulls are going to most likely smash this with one leg higher. Bulls with tons of space, anything above 118 is just looking for a weekly higher low for further price expansion. So looking very good. Continue to search for those dips on big tech. Now let's move down to Google. Google, one of our names that's dipped a lot, guys. From the top of this most recent move here, we're talking roughly almost about 8.28% at the low of today, right? So very, very good dips in big tech. I do have a position open at the 134. If it continues to dip below 130 here, I will be a buyer, guys, around 128 all the way down to 125. I will add another contract and not even think twice. Why? Because even though we have lost the daily uptrend, right now, the bears have the daily downtrend in motion here. You can see the 4-hour 12 EMA was lost in a significant fashion. We've been watching this for a while, and now the bears have done a good job of pushing down. So 4-hour downtrend translated into once a daily downtrend as well. But very healthy consolidation, just looking for a weekly higher low on Google. Google never set a new 52-week high, but they did engulf almost the entire move. So now we're just looking for a weekly weekly higher low. Anything compared to 121.41 is a weekly higher low here for potential another weekly leg up. And this would be resetting the weekly uptrend. They lost the weekly uptrend right here with this move right here, cutting the lows. Now we have to regain the weekly uptrend. Google positioned very, very well for the next 6 to 12 months. So no red flags whatsoever. Google monthly bulls are looking extremely healthy as well. The weekly is looking extremely healthy. No red flags in my opinion, despite losing this 12 EMA ever so briefly. And on the daily, yes, it is coming down in an aggressive fashion. But you can see our lower time frames here. 4-hour is oversold. 1 hour was oversold today. So we're getting there, guys. The dips are coming, and I will be buying them aggressively. Looking very healthy for the next couple of weeks, couple of months, and the next year as well. No red flags in Google's company earnings either. Now let's move down to Meta. Meta as well, one of our companies that has been on a very aggressive dip, top to bottom. 8.5%. So that's not nothing, right? So very, very good dip here by the bears. You can see once again, 4-hour time frame. The rollover of the 12 EMA on the 4-hour chart was complete, and now 4-hour downtrend. So now you do have your daily consolidation here. We've lost the series of higher highs, higher lows, right? Daily uptrend up. This was your most recent low, 326.66. Now we've lost that. So daily downtrend is not set. Daily downtrend would need something like this. Even if they do set the daily downtrend, guys, it's just looking for a weekly higher low. This is a weekly bull flag once again, right? Weekly uptrend, looking for a weekly higher low. Anything above 279 is just a weekly higher low for further price expansion. No red flags on Meta, just a very nice dip. I was saying this so far. Look out for this area right here. 320 all the way down to 310 seem to be reacting nicely. As you can see here today, guys, we got down about 313, and the bulls started really buying the dip here aggressively. So looking good on Meta. We just need to watch out for the potential daily downtrend. Daily downtrend would just mean a bit further weekly consolidation. But as of now, no red flags whatsoever. Meta bulls control absolutely everything except for the daily at this point, right? They control the weekly, and they also control this monthly breakout with the month of November. So looking very, very healthy. Great dip buying opportunity. If we continue to trend down towards 310, I will be writing some options, 310 down to 300 personally. And now Microsoft as well. Nice little dip off the highs, right? Top to bottom, 5.5%. So not as aggressive as some of their names, but very, very good dip, right? Erasing the past couple of weeks of trading in only a few days. So that is what you want to see for dips, aggressive dips here while the markets remain flat. SPY remains flat. So we lost these 12 EMA on the 4-hour, and as soon as they lost it, 4-hour downtrend was confirmed, which sends us into daily consolidation at this point. You can see aggressive coming down, low on the RSI at this point, oversold on the 1-hour. So the dip is getting bought by the bulls here. Very, very quick dip by the bears indeed. So daily, just looking for the bears to eventually bottom out. If ever they do set the daily downtrend, no problem at all. This is just weekly consolidation for Microsoft, much needed weekly consolidation. Beautiful move here on the weekly, tons of space, anything above 324 is just looking for a weekly higher low. Keep an eye, guys. 350 all the way down to 340 is a likely area of support for your bulls if ever we do get down there. I personally won't be adding any Microsoft, a little bit too rich for me, but no red flags whatsoever. Weekly bulls, full control. This is a weekly bull flag. Daily, just wait for the daily consolidation to be over. That will be the end of your weekly move down. And obviously Microsoft monthly bulls are in full control of this monthly uptrend. Now our three last ones here are actually NVIDIA first. Sorry, NVIDIA, our leader to the downside. So daily downtrend on NVIDIA is set. That's okay, guys, down another almost 3% on the day, but that's fine. They're reacting from the zone that we were targeting in the previous video. 450 down to roughly 440 is going to be the area where I do think the bulls put up a bit more resistance here. So 450 all the way down to 440, this little pocket right here is where we should be expecting some bulls to start buying the dip if they do come in. So nice little daily downtrend by the bears here. That is weekly consolidation. NVIDIA now on week number 3 of weekly consolidation. So anything above 390 is pretty much a weekly higher low for further price expansion. Don't want to see the bears get down into the 430, 420 area. That would be a bit low for me. May have to accumulate a bit further at that point, but as of now, still looking healthy, still holding your 12 EMA. We'll see what happens here. Bears in full control of the short-term timeframes need to eventually reverse this into a daily uptrend. As soon as you get that daily uptrend reversal, you know that your weekly higher low is set and that we are due for a potential other weekly leg up. Now let's move down to Tesla. Give me a quick second. So Tesla not looking too bad, obviously off of our most recent highs here of about 252, off about 8%. So once again, another dip to be had in a name like Tesla. So all of our major tech names, as you can see, have been dipping as the rest of the market has either been green or most likely flat. So a lot of dip buying opportunity now stuck back in this range. We had a nice little breakout of the range and it only lasted for one day and now we're kind of back stuck in this range. So once again, guys, the area that you don't want to lose is 227. Don't want to lose 227 because that would really lose the bottom end of the range. If it just looks below, it could set up for a potential daily downtrend. Daily downtrend would mean that weekly consolidation is just going to continue further. Weekly downtrend is still held by the bears. So until we reverse this into a weekly uptrend by the bulls, the bears are still in control of this weekly. So they do have one more shot down, right? And what we're protecting here is the moving averages on the weekly. I'll remind you here, the moving average is roughly in the lower 230s. And then you have your last area of support right down here, the 227. So we're battling. Daily moving averages are here. Weekly moving averages are here. It is a real battle for the bulls. If ever we do pull back, guys, into the lower 230, all the way down to roughly 220, I will be adding some positions on Tesla. 225 down to around 210 is going to be my sweet spot for writing options on Tesla. Cannot wait to try and snipe this weekly higher low for a potential weekly leg higher here into the end of the year and Q1, right? So going to be looking forward for that. That is my play that I'm looking at on Tesla. Haven't played it in a while. I've been looking for a little bit more of a dip in Tesla. As soon as we get below 230, 225, I'm definitely going to be writing some options, some very aggressive options as a matter of fact, because I would not mind riding the shares higher. No red flags as of yet. The red flags come if you start breaking 227 to the downside, then we really have to watch the size of this bear move down, but definitely my sweet spot zone for buying Tesla here. Now, our two last ones, Palantir and PayPal. So Palantir with a very, very bad day here today, right? So 9.23% to the downside. Palantir, daily downtrend is confirmed by the bears at this point. So daily downtrend is had by the bears. That's okay. We just zoom out to the weekly. It is just weekly consolidation. Still a weekly bull flag, guys, right? Weekly higher low. Weekly higher low, that's what we're looking for. Keep an eye, guys. 18 all the way down to 17 is an area that we've been highlighting in the previous videos here. It is this previous area of resistance, which should now be acting as support. Very, very big zone of congestion between the $18 and $17 range. You can see that it played out a lot back here, and it will be playing out a lot here as well. So I do have a position on Palantir for this week. I've been playing Palantir for the last 3 weeks as it's been pulling back. So far, so good. Haven't been assigned anything, but wouldn't mind being assigned any shares in the $17 range. I still think they're set up very, very beautifully for weekly continuation. No red flags, weekly bulls in full control here. So eventually, the daily bulls are going to have to reset this into a daily uptrend. As soon as that happens, you know that your weekly higher low is set and that we're due for another weekly leg higher. No red flags. Palantir monthly breakout mode all but completed. I would like to see them close above this 21 area, this $20 range, right? So kind of keeping it back in the range, but it is a monthly uptrend. Technically, just need to see a little bit more follow through in the next couple of months. And I don't think there's any problem with doing that. Palantir valuation, very, very juicy right now. Now let's move down to PayPal. PayPal, excuse me, performing well, guys. Performing very well. 1, 2, 3 legs higher. And now we are on leg number 4. So maintaining the series of higher highs and higher lows. Anything above 57.15 now on the pullback is just going to be for a daily higher low for further price continuation. I need to see them close in the $61, $62 range, guys. $61, $62 would be perfect for me. Why? Because we're looking to take back more of this weekly move. I'll put the fib on it one last time for you guys. We get up into the $60 range. I'll remind you, right? Get up into about 61.50. That is 80% of this move down. So I know the chart's kind of flat right now, but that means 80% of this most recent leg down will have been recaptured by the bulls. We will have control of the moving averages as well. And you'll set yourself up nicely for a potential weekly uptrend. Same thing that happened here. So that's what we're looking out for on PayPal. So far, so good. Just grinding away at those levels. I like the fact that they're getting now above this most recent area, which was support for a long time, was now acting as resistance a couple times. And now the market is pushing higher. So now our next targets, guys, need to be in the lower to mid 60s. $63 to $65 needs to be the target for the bulls. Get back up there and we really create enough space to capture a weekly uptrend and potentially reverse some of the longer term timeframes for this stock. So far, so good on PayPal. No red flags, just grinding higher. And now lastly, guys, let's take a look at my portfolio. All right, guys, so taking a look at my portfolio here, you can see that we've been performing very well over the past month as the market has recovered, and a lot of our positions are now very, very juicy indeed. So as it stands currently, portfolio performance year to date is around 47%, so very, very good. And also, we are outperforming SPY by roughly 2.5, right? So we're all the way up at around 47%, and SPY only up under 20%. So very, very good outperformance against our benchmark index. And now we have put some space between us and the NASDAQ here. You can see us up at 47 and the NASDAQ still trailing at about 37%. So we are outperforming your buy and hold QQQ bulls, doing very, very, very good for the year. Now looking into our positions here, you'll see there's a lot of stuff. So let's cover a few things. We're going to cover first our positions that ended last week. So you can see these are all the positions that expired or I got assigned last week. I only got assigned one, and that's Google at 134. Really, really happy about that, to be honest with you guys. But the rest expired pretty much worthless. CELH, ELF Beauty, the CELH closed above 50, so we captured all that premium. ELF closed above 113. The KRs that we had at 44 and the Palantirs at 18.5. Everything ended worthless. You can see all those trades. So we'll go through, we'll find them. We'll find the CELH, right? Expired right here. It is right down here. CLH, we wrote 2 contracts for 25 cents each. They expired worthless, so we pocket $50. Palantir, we had 5 contracts at 8 cents, so that's $40 that we just put in our pocket. Those assigned worthless, those expired worthless as well. ELF Beauty, the 113s that we wrote did expire worthless as well, so we pocketed this entire $51. Google, we got assigned the 134s. We got a 16-cent credit for that. So our break even is now around 133.84. So not too bad of a break even. If it continues to drop, I'll be adding more. And KRs ended above 44. I'll show you that if you're not too familiar with the name. So Kroger, obviously the retail grocery chain, ended over 44 last Friday. So we pocketed all of that premium. And by that, we're talking in around 20 cents per contract. I do have an open contract on AMD. We'll look at that right away. And everything else is new. So let's look into the new positions, guys. So Palantir, playing Palantir again. You can see we wrote the 17.5s today, and we got about 13 cents a piece. We have 6 contracts on them. So we're looking to make about $80 off of that if they come to fruition. If I get assigned at 17.5, that's all the better. I will keep the shares and write some covered calls. We also have added a bit to the Rivian position too. So we wrote some calls on Rivian. This is my initial strike. I'll show you my Rivian shares are down here. I currently have 200 shares at a cost basis in the account, 1833. That's not the full picture. You have to take in mind that I've been writing premium against these. So the full picture on Rivian at this point with all our premium collected is going to be a break even of 1696 down here. So price is still above us. We're up roughly $1 a share at this point from all the premium that we've written, but I want to be riding this stock higher, most likely into the $20 range. Today was just a way to get my premium down. So if we get over $18 and a half this week, obviously the shares will be called away. That's okay, but the premium was too juicy. I couldn't resist just lowering our cost basis a bit more. And we did add 2 contracts at 16.5. So if ever the price comes down to 16.5 at this point, I will be looking to add 200 more shares and increase my position size. I think Rivian has found a nice little technical bottom in this whole $15 to $16 range. So if we do come back into there, I'll be looking to add a couple shares. Now, we do have the AMD 115 put. That's still there from last Thursday. So we wrote that last week. We got 97 cents for it. We will see if it closes above 115 or not by this Friday. If it doesn't and we get a sign, perfect. I will be looking to add more shares lower. If not, we'll just take this premium. That's it. And then we have Trade Desk 66 on deck, right? So Trade Desk looking good. 68.76. Trade Desk obviously had a very bad situation after their earnings where they came down roughly 16%. So we've been writing puts on it ever since. At this point, I am targeting the 66 strike. Once again, if we do get a sign, I will be holding the shares, guys. I do think Trade Desk has a nice recovery, at least back into the $70, $80 range here over the next couple of weeks. So if I do get a sign, just looking to really ride this weekly breakout here. Very good. Excuse me, guys, by the way, I have a little bit of a cold. Looking to ride that as best as I can here back into our higher $70, $80 levels. I do think the valuation of this company is fairly attractive, and I did like their earnings despite the market reaction. We did cover their earnings on the channel. And now lastly, we have UPS. So UPS, you guys can see, UPS shares are right here. They're currently trading roughly around $156. We got assigned at $152.50. But what did we do? We wrote a bunch of premium and we even got a dividend. So our break even on these with the call that I wrote today is 145.08. So now we're roughly $1,000 in the green on UPS. I will be looking to add these. I wrote the 157.50 calls. Okay, so you can see that right here. We wrote the 157.50 calls for 86 cents. So if it ends above 157.50, we will have those shares called away. But with all of this, we have a break-even price of around 145.08. So that would be a nice $1,250 gain roughly that we will be banking. If it closes below 157, I just keep the shares. We will continue to write calls on them. I'm looking to ride this position potentially into the 160s. We'll see how it goes. But UPS set up beautifully. It's the holidays is usually one of their best quarters, obviously, as is the quarter where you have the most amount of shipping here. So those are the plays that I've taken today. Still looking to shop for more of big tech into the rest of the week, tomorrow and Wednesday as well. And the rest of the plays are still here. Baba, you can see, still not high enough for me to write any covered calls, not lower enough for me to average down either. CP, the one that I got assigned at $72.50, are all the way back up to $74.61. So we're now a cool $300+ in profit. Very, very good. I have the Googles, going to be waiting on those. The UPS we just covered. PayPal still here. Rivian is still here. CSIQ still here, guys. My break even on CSIQ, I'll remind you, is $28. So not high enough yet for me to be writing covered calls, or low enough for me to average. I'd like to average under 20, but haven't done it so far. And my banking shares obviously coming back a little bit, now only down $1 a share on 1,000 shares. So that is pretty much everything that I had for you guys today. I hope you guys enjoyed it. As usual, if you did like it, consider dropping a like on the video. It really helps me out. And consider subscribing to the channel if you're new. We do these videos pretty much every day after the close. And as always, if you have any questions, guys, stocks, macro options, feel free to leave it down below in the comments and I'll be more than happy to answer to you. So I'll see you guys tomorrow after the close, and take care. Peace.